the Reserve Bank of Australia a moment ago at 2:30 just announced an official increase to the cash rate. First time we've seen an increase since 2010, 12 years. However, it's not panic stations. You know, this increase is mainly off the back of inflation results coming out last week on the 27th, a bit higher than expected, 5.1%, bringing the trimmed average to 3.7, which is higher than the target the government has of 2 to 3%. So to trim inflation, to ease inflation, I should say, the government means to start increasing interest rates. There's been pressure in the background about this for some time now. But the economy as a whole is doing well. You know, we've got low unemployment, 4%, and they're expected to see that hit to 3.5% towards the end of the year. Equities markets around the world, global equities are doing well. The US and Australia hit all-time highs this year. Wage growth, whilst it hasn't been, accurately reported, in my opinion, there's definitely wage growth in the marketplace, in the economy, in many industries, countless industries. All our clients, all our self-employed practices, a lot of our clients are complaining about the amount of wage growth in their businesses. So I think that'll soon trickle through as well.
And what would this mean for all the first-home buyers out there?
So I think the property market will stay quite buoyant. I think interest rates are still very low, relatively, especially to the last 10, 20 years. You know, they're talking about, most of the bank economists are forecasting 1 to 2% over the next year or two in increases. That brings the average variable rate for the consumer to about 3.5 to 4.5%. 4.5 is a big jump from where we are today, but I think if you look at it from a last 10 to 15 year average, it's still a very low rate. So I think the property market will stay buoyant, and I think the average, for first home buyers, the only issue is affordability in a sense of borrowing power. So as interest rates go up, borrowing powers go down because the bank calculates affordability on a buffer above what you actually pay as interest rate. So your borrowing power will respectfully reduce as interest rates increase.
Would you say that would be relative to property prices?
Well, I think there's just going to be less heat in the market, right? Last year, you'd have 10, 15 contract holders or 10, 15 bidders at an auction bidding on a property. Now you might only have 4 or 5. So yes, you might see properties just sell for more realistic prices. So if the price guide was $2.5 million, instead of it selling for $3.5 million, it's selling for 2.7 to 2.8, being a bit more of a realistic price. So I guess you could say that is a softening in itself. But no, I don't see a property market crash as some are saying. If you look back at the GFC, our ASX crashed from 6,800 points down to 2,800 points. I think that's roughly 60%. It came off, and we saw the property market come off 7%. So I'm quite bullish on the property market still. I have a positive view that it will stay buoyant.